It's the end of the year and I am tired, but let me leave y'all with something. Let me tell you what they never taught you they never taught you in school, right? And your job won't remind you. And your accountant, they already logged off for the holidays, right? But here's what nobody tell you. While everyone else is picking out the outfit and planning which party to hit, the IRS is sitting in a room, right? I imagine sitting in the dark room, sharpening his pencils, calculating exactly how much money they're going to take from you from what you made in 2025. And if you miss what I'm about to show you in the next 15 minutes, you don't just lose money, you hand it over to them, gift wrapped with a bow on top, like on Christmas. So here's the deal. I'm gonna walk you through 5 financial moves that must happen before midnight tomorrow. All right, not next week, not when things calm down, tomorrow. Right? So these aren't tips, these aren't suggestions. These are the exact plays the wealthy execute every single December 31st while everyone else is distracted by fireworks and champagnes. So let's get to work. Let me pause y'all right quick. Everybody's chasing money. This is 2025, pretty much 2026 now. Nobody's teaching you how to think though. That's the problem that I'm solving with brick by brick. No hype, no guru nonsense. No screenshots with the dates cropped out, just real trades, real logic, real losses included. Every week we do this, we walk through exactly what I did, the entry, the exit, the Greeks, and the mistakes I made, because I'm not perfect, so none of us repeat them. You're not buying signals, y'all. You're learning how to see the game. The Greeks room, the full playbook, the framework behind every decision. This isn't a shortcut. Let me make that clear now. It's a skill. So if you're done guessing and actually ready to understand what you're doing with your money, the link's below. Brick by brick. It's built different. You're built different. But let's do this together, y'all. Right now, I want you to do something. Pull out your phone. Open your brokerage account. Charles Schwab, Fidelity, Robinhood, Webull, whatever you use. Don't bookmark this video to watch later. Don't tell yourself you'll do it in the morning. Do it now, right now, while I'm talking. Look at your portfolio. See those red numbers? Those stocks that are down? Those investments that you wish you never made? That crypto position that makes you wince every time you see it? Here's what most people do, okay? They pretend it doesn't exist. They hold up, hoping it'll come back. They tell themselves it's not a real loss until they sell. Okay. That's exactly what keeps you broke. Here's what the wealthy know. These losses, they're not failures. They're actually weapons. Let me explain how this works, right? If you sold winning stocks this year, if you made a lot of money this year, maybe you took profits on Apple, right? Maybe you sold some Tesla shares. Maybe you cashed out on that lucky trade. The IRS is coming for capital gains tax on those profits. But here's the loophole that they don't advertise, all right? When you say you're losing positions before December the 31st, those losses offset your gains, dollar for dollar, line by line. You made $10,000 in gain, sell $10,000 in losses. You owe zero in capital gains tax. This is called tax loss harvesting, all right? Tax loss harvesting. And it's completely legal. The IRS literally built this into the tax code, literally. But here's the key. It only works if you execute before the calendar flips over to 2026. That's all I say, you gotta work. Now, you may be thinking, but what if the stock comes back? Great question, but here's the move. If you sell it today, lock in the tax loss, then if you still believe in it, you buy it back after 31 days. That's the IRS wash sell rule. Wait 31 days, buy it back, and you permanently capture that tax benefit. Or even smarter, sell it and immediately buy something similar, but not identical, all right? So one tech ETF, buy a different tech ETF. You stay in the game, but you banked the tax shield. This isn't trading, this isn't gambling, y'all, all right? This is tax judo, right? Using the system's weight against itself. Brick by brick, soldiers don't stare at red numbers and feel shame. We deploy them. We weaponize them, right? I'm gonna give you all the answers, right? So right now, yes, right now, scroll through your portfolio. Why you on the phone with me? Because you might be watching this on your TV. Find every position that's down, screenshot it, and ask yourself, Is the tax loss worth more to me than holding this position? Because the clock is ticking. So let's talk about 401k right quick, right? Let's talk about ceilings. Most people see contribution limits as a suggestion, right? A nice idea, something for rich people. The wealthy see them as a target, a mandate per se, a line you sprint toward, not scroll past. So here's the number you need to know: 23,500. That's how much you could contribute to your 2,000 and contribute to your 401k if you're under 50. And if you're over 50, add in another 7,500, that's 31,000 total. All right. So now I know what you're thinking. I can't afford it. But here's what you're missing. That's not money leaving your life. That's money that the IRS can't touch. Every dollar that you put into your 401k reduces your taxable income. If you're in the 24% tax bracket, every $1,000 that you contribute saves you $240 in taxes to date. So you're not spending $1,000. You're spending $760 and the government is covering the rest. And then here's the magic. That money grows tax deferred. No taxes on dividends, no taxes on gains. It compounds untouched for decades. Here's what I want you to do tonight, right? Log into your employer portal. Find your 401k settings. Look at your contribution percentage. If you're sitting at 3%, 5%, 8%, bump it up. Even just 1 or 2 percentage points. But I need that money now, right? That's what you might be saying. I hear you. But here's the truth. Future you is begging present you to make this move. Because the difference between retiring comfortable and retiring terrified is built in these small decisions made decades earlier. This isn't about retirement age. This is about retirement power. The power to say no, the power to walk away, the power to live on your terms. And that power is built one contribution at a time. Don't wait. The contribution deadline is December 31st. And after that, this year's limit is gone forever. And just in case you didn't know, the same goes for the IRA, Roth, and traditional. Let's make it smart. So let's talk about the FSA, right? Now I want you to open another app, your benefits portal, your employer dashboard, wherever your FSA lives. FSA stands for Flexible Spending Account. Most of us have it, don't even realize we pay for it. And if you have money sitting in there right now, you need to listen to this very, very carefully. At midnight tomorrow, any unused FSA money disappears. No carryovers, not rolls into next year, not gets refunded, evaporates. Boom, done. This is the most brutal rules in personal finance. And most people don't even know it exists until it's too late. So here's what you do tonight. Check your balance. If there's $50 in there, great. If there's $500 in there, pay attention. If there's $1,500 in there, we got work to do. So here's what's FSA eligible, all right? Prescription glasses, get new frames, upgrade your lenses, contact lenses, buy a year supply right now. Amazon, 1-800-CONTACTS, done, right? Dental work, that crown you've been putting off, that cleaning you skipped. Nobody going to the dentist right now. It's New Year's Eve. You do it, schedule it, pay for it. Use the FSA, therapy sessions, co-pays, counts. Mental health is health, right? Medical supplies, first aid kits, thermometers, blood pressure monitors, sunscreen. Yes, sunscreen. That isn't extra money. This is your money, y'all. You already set it aside. Your employer is just holding it hostage, right? Don't let it repo it quietly. That's your money. So spend it tonight, before midnight tomorrow, because every dollar you leave on the table is a dollar that you gave away. So there's people in different brackets, right? And we all want to be able to do something to feel good. So let's next year, not whenever you get around to it, this year, right? So if you're planning to giving it charity in December, do it tonight instead. Same donation, same cause, total different tax outcome. Now, here's how to move. Here's the move that ultra wealthy use. Instead of donating cash, they donate appreciated stock. Let's say you bought stock for $1,000, right? Let's say you bought Netflix, and now it's worth $5,000. If you sell it, you will capital gains on that $4,000 gain. But if you donate the stock directly to a charity, you get a deduction for the full $5,000 and you never pay the capital gas tax gains. Whew. Cheat code. The charity gets the same 5,000 and you save on taxes twice, right? Everybody wins. This is how generosity becomes a wealth accelerator instead of a tax guilt, right? Now, if you're saying, I'm not saying donate just for a tax write-off, right? We all got a heart, right? That's hollow. But if you're already planning to give, and you should be, why not structure it in a way that maximizes impact and maximizes taxes, and minimizes taxes? Because charity isn't weakness. It's strategy with compassion baked in. Think about how many times you fed people that was, in need, or clothed people that was in need, right? It's one of the few places where doing good and doing well are the same thing. So tonight, pick a cause, find a charity, make the donation. Your taxes will thank you. And so will the world. Now, we covered the tactical moves. Now, let's talk about the shift that changes everything. So I want you to grab a notebook, a sheet of paper, a notes app, anything, whatever you use, right? And I want you to write down two numbers. Number one, your net worth, right? Add up everything you own: bank accounts, investment accounts, retirement accounts, the value of your car, your home equity if you own property. Then subtract everything that you owe: credit card debt, student loans, car loans, your mortgage balance. That's your net worth. Most people have never calculated this number, ever. They have a vague sense of, I'm doing okay, or I'm struggling, but they never actually looked. That ends tonight. Number two, your monthly cash flow. What comes in every month? Paycheck, right? Side hustle. How many people are doing DoorDash now, right? How many people are just getting out there? Dividends, whatever, right? What goes out? Rent, groceries, subscriptions, debt payments, everything. Subtract expenses from income, all right? That's your cash flow. If it's positive, you're winning. If it's negative, you're losing. If it's at zero, you're treading water. Now, here's the key. This exercise isn't designed to depress you, right? We don't want to go into the new year the wrong way. It's designed to liberate you, all right? Because you can't fix what you don't measure, right? You can't improve on what you don't face, right? Because clarity kills anxiety. Awareness is the first brick of wealth. So tomorrow, when everybody else is setting vague resolutions like, I'm going to save more or be better with money, you're going to declare a strategy. You're going to know your numbers. You're going to have a plan. No more vibes, no more hoping, only structure. And that's the difference between people who wish for wealth and people who actually build wealth. So if you made it this far, you're already ahead. Most people won't watch this. Most people will just turn it off, right? Most people scroll past, assume it doesn't apply to them, or they got better things to do, right? And they'll wake up on January 1st having left thousands of dollars on the table, but not you. You're different. You showed up, you paid attention, you wrote this stuff down. Now it's time to execute, all right? So tax loss harvesting, 401k contribution, FSA spending, charitable donations, financial reset, 5 moves, right? One deadline, tomorrow at midnight. It's coming up. And if this video helped you, if you learned anything, even one thing you didn't know before, share it with someone. This is how we build together. Because someone right now, someone you care about, is about to lose money simply because nobody told them the rules. Be the person who tells them. This is brick by brick, and we don't leave money on the table. Let's build.